welcome to Leaders of Tomorrow, 18-hour special initiative that celebrates the undying entrepreneurial spirit of micro, small and medium enterprises. Here's what we have lined up on the show for you tonight. On our Insights segment, a conversation with Indify Technologies, and on Bright Sparks, we're featuring two companies, Milagro as well as Cargo People Logistics and Shipping. A packed show then in store for you tonight. Let's start off right away with our Insights segment. Fintech is not just a buzzword anymore, but something that is making even traditional companies, especially banks, sit up and take notice. Of specific interest then to the MSME as well as the SME entrepreneur are companies like Indify Technologies. This operates as a marketplace connecting banks as well as non-banking financial companies with small and medium enterprises, opening up therefore for these companies newer avenues of financing for small businesses as well as entrepreneurs. I caught up with Alok Mittal. He used to be at Cannon Partners for the longest time. He's now the founder of Indify Technologies. Here's what he had to say about this business model. I'm in conversation with Alok Mittal, CEO of Indify Technologies. Alok, thanks so much for speaking with us. Let's, as always, start this conversation off by getting the story behind the journey of setting up the company.
Indify is a platform for enabling loans to MSMEs in India, micro and small enterprises in India. The basic thesis that we are pursuing is to partner with large supply chain organizations who deal with literally thousands of SMEs on a daily basis and use their reach and the data that they have regarding small businesses to enable credit. So in this manner, we are able to reach out to small businesses that otherwise are too dispersed or too data poor from a credit standpoint and enable credit to those SMEs.
Alok, you quit a very successful career at Cannon Partners to become an entrepreneur. What has that journey been like?
I've been in the entrepreneurship space now for about 17 years. So I did my first startup in 1999, which was Jobs Ahead. We sold that company to Monster.com. And in 2006, when I came out of Jobs Ahead, I decided to give venture capital a try, which was a lot of fun for a lot of time. We invested in about a dozen companies through Cannon Partners in India. Over the last year or two, I came across a decision point of whether I wanted to continue in the venture industry for the next 10 years or do something else. And I felt like I had another startup in me. And this was the right time for me to take that jump. So about 2 years back is when I decided that we were going to do a startup. By the time I zeroed in on an idea and co-founders, we landed up starting the company last May. So now we are just about more than a year old. And honestly very excited about having made the transition that I did.
All right, what's the one piece of advice you would have for entrepreneurs of our show, given that you, of course, have been both on the investing side as well as now in terms of being an entrepreneur?
One of the core learnings that I have had in my entrepreneurial and venture career is that entrepreneurs need to stay true to the customer and the market. Very often financing environments and the volatility in financing environments starts to govern what entrepreneurs do and what they don't. But those things are fairly short-lived. So it's important for entrepreneurs to stay focused on the customer, what their needs are, and is the startup adding real value, rather than just ride the valuation curve, which honestly, hasn't sustained in India for long enough for entrepreneurs to think of that as a sustainable strategy.
As part of the shows that we do here on the Leaders of Tomorrow, Alok, one question that we get asked all the time from entrepreneurs who write in or call us is that they find it difficult accessing funds. What's the advice you would give them about how to go about accessing these funds, making themselves more investment ready?
My first advice to entrepreneurs will be, build a business that doesn't rely on financing as a success or failure factor. Sure, financing can boost your plans. But if the business is going to go out because of lack of financing, then that's probably not a great choice of business to start with. Having said that, I think the second piece of advice that I would have is to understand what financiers are looking for. Typically, venture capitalists look for disproportionate upside, both in terms of multiple on their money, but also the absolute amount. So, a business which is going to be valued less than a couple of $100 million over time is just not worth the while for most of the VCs. Angel investors can take lower bites because they tend to take lower exposure. They don't necessarily have an absolute bar in their mind. And then there are other financing structures like debt and royalty-based structures which can fly for cash flow-based businesses. So I think it's important for entrepreneurs to understand those choices and make sure that they're approaching financing sources that fit in with their choice of business model.
I want to understand from you, what are the top, one or two things that you would advise our viewers in terms of making themselves more attractive when it comes to funding?
See, the big factors that have kept financing away from MSME has been the lack of reliable data. And in a lot of ways, MSMEs themselves can improve that situation by making sure, that their accounts, balance sheets, income tax returns are accurate and filed regularly. Just that one step can help MSMEs get access to better financing. Use of electronic payment mechanisms, right? Banking or other mechanisms that are electronic rather than cash is another way for MSMEs to make sure that their transaction history is available more seamlessly and more reliably, which improves their chances of getting debt capital. I think classically some of these things have also been underemphasized because it was possible to evade taxes. However, now with the indirect tax system capturing a large volume of these transactions, that motivation of bypassing the tax system is getting weaker and weaker. And hence we believe that more and more MSMEs will start to comply more accurately and hence power their own financing initiatives as well as that of the industry.
Let's talk about fintech. How big is that set to become in India, in your opinion?
Yeah, so IFC did a study where they quantified the gap in MSME debt financing at about $380 billion, right? And that was a 4-year-old study. Estimates are that number is growing rapidly because of the growth that the country is seeing. So in absolute terms, this is a huge market, and it is a hugely underserved market. As I mentioned, the challenges have all been those of finding the right channels to get to SMEs and then finding the right data to be able to underwrite to. So for a startup like ours, the way we think about it is not whether this market is large enough or is going to be large enough. It is, but more of what slices of this market can be solved for efficiently. And hence we have chosen to go after large supply chain aggregators because that allows us to solve both for the channel as well as for the data issues. And our belief is that more and more MSMEs are going to start to get included in these ecosystems, supply chain ecosystems, and hence the addressable opportunity for us continues to expand as we move forward.
How do companies like yourself use technology more in your day-to-day operations, and what's the advice you would have for your peers and for MSMEs in how to incorporate technology more into your daily operations?
We think that technology has a few different functions in the financing industry. The first one is to deliver a superior borrower experience. If an MSME lands up in a conventional lending organization today, they might take anywhere from a few weeks to a few months to get credit approved, even if they get one. We are aiming to do all of this in under 5 days. We are also beginning to collect data electronically rather than in physical format, which is much easier for the borrowers as well. So customer experience is one of the top elements that we think we can influence. The second key area where we want to use technology is to make sure that we can build better underwriting models. The third important role that we think technology has to play is in optimizing the cost structure. And today, we are very young, we are only about a year old, but we can already identify up to 50% cost savings in the operating cost that is involved in the lending business.
What's the gap that exists in India right now, Alok, in your opinion, between fund requirement for MSMEs and the availability of these funds?
So as I mentioned, that gap is order of magnitude of few $100 billion, right? So that is the gap that has been quantified. So the gap is fairly large, but in kind of more touch and feel manner. If you look at the base of Indifi customers, right, they're typically companies which have less than 10 crores in revenue. They want a working capital loan which ranges anywhere from 50,000 rupees to 30 lakh rupees. And they want it for a short duration, which means that the loan is not outstanding for a long time. You won't make a lot of interest income on it. And hence the operating cost has to be fairly optimized to make sure that you can still do that business profitably. So I think those are some of the gaps that we are filling in on a customer by customer basis, even though the broad market size would suggest a few $100 billion of absolute gap in the market.
A lot of the investors that we talk to say that they also provide mentoring services to the companies that they invest in, whether it's financial mentoring, whether it's business mentoring and other forms of handholding. Do you also mentor the companies that you work with?
I think, in my role as an angel investor and a VC earlier, that business is all about low volume but very high value per company, right? You invest a lot of money and you expect to make a lot of money per company, and hence you can spend a lot of time mentoring those companies. In the MSME sector, our value per customer is very low, but we expect to do this over tens of thousands of companies, and hence conventional mechanisms of mentorship do not scale. So I think just like we are finding ways of financing these businesses in a scalable and a cost-efficient manner, there will have to be ways of mentoring these companies that will have to emerge. I think the good news is that with the generational changes that are happening in MSMEs, the younger generation wants to actually grow those businesses and not just treat those as lifestyle companies. And so I do think that there is a potential for offering mentoring services, largely for companies that do want to grow their businesses and make them into large enterprises. And I do believe that there'll have to be more scalable, more cost efficient mechanisms that would have to come into play rather than the conventional notion of mentoring.
Let's take a break. On the other side, we are featuring two companies, Milagro as well as Cargo People Logistics and Shipping. Do stay tuned. Welcome back. You're with us here on Leaders of Tomorrow. On Bright Sparks tonight, we're featuring Milagro as well as Cargo People Logistics and Shipping. Online shopping is no more limited to apparel, shoes, gadgets or jewelry. The latest product we learn up for grabs is robots, and tonight on Bright Sparks we're featuring Milagro, which offers a large portfolio of human tech and is one of the fastest growing brands in fact in the domestic robot industry. Palumi Mukhopadhyay has the story for us.
Gone are the days when humans were bogged down by domestic chores. Household toil is now replaced by robotic machines. Started in 2007, Delhi-based firm Milagro merchandises in domestic robots to help consumers buy these technologically advanced machines from leading retailers and e-commerce websites. They offer a plethora of consumer robots like massaging robots, floor robots, window robots, pool robots, lawn robots, amongst many. We caught up with Milagro's founder Rajiv Karwal to help us understand the future potential of these kind of products in the Indian market.
So automation has its own set of loopholes. How can a consumer avoid the risk and control the damage while using such domestic robots?
Automation per se, I don't think has any disadvantage for the customer. But of course, when you are dealing with advanced technology, you must get well versed with it. Yes, there are privacy issues sometimes, but one can be very careful in choosing what kind of a product you want to bring it home. But internet enabled, smart, IoT products, well connected and very independent with their own mobility. These are the products of the future, and this is what today's customer and tomorrow's customer will need.
Just be honest with us. Do you think Indian consumers are ready for these kind of products? Do the sales number reflect the same?
Yes, I think the way the robots are growing in India, I am myself amazed. Of course, the top 10 cities at this point in time control almost 90% of our sales, but you will be surprised that our reading says that today out of all the vacuum cleaners which get sold in the country, almost 10% by value are the robotic vacuum cleaners, and Milagro has almost 95% market share of that. I would say that I think a robotic revolution is happening. Of course, it will start from the urban areas first and slowly spread across the country.
So robots need a very controlled environment or proper usage instructions. How do you ensure that your consumers are well trained and educated by your company to use such products?
A very good question, Polemy. Actually, as I mentioned earlier, the degrees of independence actually define how advanced the technology is. But yet, a robot will not replace somebody's civic sense. So there are certain areas where the customer has to adopt to the way a machine will operate. Can't we do a little bit of adjustment and adopt to the way robotic technology works? I would say yes.
When it comes to manufacturing these kind of products in India, do you think India is ready to take on China?
I don't think so. Reason is that when I visit China, I see that the Chinese government has actually adopted robotics as a special industry. They have given a 10-year holiday from all kinds of taxes. They have actually combined the R&D labs, the university labs, go to market for the small companies, and also brought in clusters of specialized manufacturing of components for the robotics industry.
Okay.
And as a result, it has become very, very good environment for robotics companies to work in China. And when I look at India, I don't think robotics even is there on their radar to get a special treatment.
In spite of making consumer robots accessible to buyers in India, network and functionality persist as challenges in this sector. So what sets Milagro apart when it comes to these offerings?
So our robots today can touch. Yes, they know there's an obstacle, let me not move forward. They can feel, right? Oh, this is an obstacle, this is a stair, I'm not supposed to move forward. Some of our robots can even hear, right? Or can speak to you, wherein we have, let's say, dustbin is full. There's an indicator and it will say the dustbin is full, right? Once you are tired, it's the end of the day, what do you do when your batteries are discharged? Let's say you go back, sleep on your bed. Similarly, our robots, once they're done with their work, their battery is done, that is when they are tired and the day is ended. It will go back to its docking station on its own. So this is the kind of degrees of independence they are working on.
With automation taking center stage in the technological sphere, growth of consumer robots in the Indian market seems like a natural progress. Milagro is not only presenting a vast portfolio of products, but are also helping consumers purchase them at an affordable cost.
Logistics, the backbone of India's global supply chain network, plays a key role in the Make in India campaign, and today we're bringing to you the journey of a Delhi-based MSME. It helps businesses in their global operations with its freight and import-export services. Libza Manan caught up with the man behind Cargo People Logistics and Shipping. Here's the story for us.
Cargo People Logistics and Shipping is a wholly freight forwarding company which has been fostering international presence of businesses since its inception in 2010. Delivering high quality of logistics services by rail, road and air, the brand has today developed an X factor in the industry.
So Manoj, tell us about your role in building a wholly international freight forwarding company like Cargo People Logistics and Shipping.
We founded Cargo People in 2010 with an idea that we want to get into a business which has three attributes. One is the organization should be scalable, and second is it should be service industry, and third it should be in international business.
Apart from freight, what are the other services that the company offers to help clients in doing international business?
We help them find good insurances. That's one area, because that's where they get confused that what kind of policies they should take. So we help them that, and we help them in custom clearance also, that what kind of documentations are required, how they can be they can be more safe, and what documents they should be ready with. So we help them with the documentation, insurance, and the most important is we give them the services which are customized to them.
How has Cargo People Logistics and Shipping created a niche for itself in a traditional business sector like logistics?
Logistics is one of the oldest organized business worldwide. So like this is the oldest service which mankind has been providing. So of course when we started, we could not find a lot of innovation scope, because a lot of things has already been done in terms of technology, in terms of service and all that. So how we could find ourselves different from others is through our business model. Like we are we are creating a business model which we can replicate in all other our branches, like so that my involvement as in terms of transactions, in terms of operations or business will not be there. So we have created a model, and that model we are replicating to the branches we are opening up.
Well, the recent blast in the Chinese city of Tianjin clearly highlights safety discrepancies in the logistics industry. What do you think are some of the lessons that India needs to learn from this tragedy?
A lot of time there is ambiguity that this cargo is, this comes in dangerous or it doesn't comes in dangerous. None of the users are aware of that. It is just that we need to give the details to the shipping lines and airlines, and then they define it whether it's dangerous or not. So this is one area which is a big gap, and I think that's that because of that gap, that tragedy had happened, and lot of assets has been lost and a lot of value was diminished because of that tragedy. So what we want, we are pushing shipping lines that to create more awareness, let people understand that how they can define that which of their chemical is how much dangerous. They have certain categories.
With an aim to provide seamless service to customers, Cargo People offers door-to-door delivery. The brand also provides warehousing and distribution services, owning warehouses in New Delhi and China, along with contracted warehouses in all metro cities across India and overseas.
What do you feel are some of the challenges in India's logistics industry, and would you like to highlight some demands from the government for ease of doing business in this sector?
The main constraint we find compared to our peers in international market is the lack of infrastructure. So that's one area we have been pushing government through PhD and through FICCI that we need to increase on those areas. Now since Make in India is coming up and we are also gearing up for that, so we are looking at lot of changes or 360-degree turnaround in the infrastructure, which is still way behind from our peers worldwide. So that's one area we are looking at government to help us.
As you just spoke about Make in India, how important do you think is the role of logistics sector in such an initiative?
Logistics is in any ways is a backbone of any industry. So it is imperative that our performance is very critical for any organizations to grow, and for that our dependability on the infrastructure is very high. So of course that we are looking at areas where we can improve as an organization or as an industry, that we can add a lot of value to the global business and to this Make in India concept.
Well, Cargo People Logistics and Shipping boast of having an X factor. What is it?
When we started or when we got into this business, that most of the business is done offline. So we are taking this as an opportunity for us, and we are coming up with our application. You will get your quotes and everything will be online. So you will find a lot of information on that. So this is one area where we are just we want to take lead as far as online business is concerned. So that will take us to next level, and that's our X factor.
The company, which clocked an annual turnover of more than 20 crores last year, eyes to double the revenues this year. An ambitious target which it aims to achieve with its customer-centric strategy and its footprint spread across 25 countries.
That's all we could pack in tonight on the Leaders of Tomorrow. Do write in to us at leadersoftomorrow@timesgroup.com. Reach us on social media using the hashtag LOT, or call us on the number on your screens if you have anything you would like to say to us. Thanks for watching. Have a good night.